Thank you for learning more about the QuantDirection platform's trade alerts. QuantDirection brings the benefits of quantitative trading and artificial intelligence to the individual retail trader. Our mission is to make the complex very simple to use. This extends to our trade alerts. With your sign-up, you automatically given a default trade alert setup. This includes many of our highest probability and most popular price conditions. You may then customize your setup to better fit your trading style at any time. In this video, we'll show you how you can use and modify your existing alerts and set up new ones. In fact, you can customize where you receive alerts, their frequency and duration, and you can pause your alerts and much more. Hello, I'm Brian, and thanks for joining me as we help you get started using trade alerts, one of the most powerful features of the QuantDirection platform. I hope you will stay to the end to receive our top 10 tips to get the most from these trade signals, and much more. Let's begin. There are 3 ways you can receive trade alerts: via text or SMS for your mobile phone, or by email message on any connected device, or on your weekly trade alerts report, which is accessed from your QuantDirection dashboard. All 3 notification methods give you an actionable signal, buy-sell information, and trading guidance. Plus, there are links to get more detail on the statistical data and to do advanced data analysis if desired. Let's take a closer look at the alerts. Each trade alert is designed to give you easy to understand and actionable information you can trade on quickly. In the email alerts, you will see the signal in your subject line. At the top of the body of the alert, you'll see the trade strategy to quickly decide if this is an opportunity you're interested in. This is followed by trading guidance, including for options, to give you clear buy to open, sell to close, days to expiration and strike price information, to execute contracts, for options calls, puts and spreads. Stocks and ETF have both options and stock trading guidance, while SPX has options guidance, and the ES minis include futures guidance. There is also a link to trade alert details where you can get quick information right on your phone or PC on basic statistics like probability, the data count the probability was derived from, and a description of the expected price action. You can also cancel the alert by clicking on the link, or customize the alert by clicking on Manage Trade Alerts. The Trade Alert Report gives you key at-a-glance information for every alert you have received during the week. This includes the alert number, alert price, current price, the alert signal and trading strategy, as well as trading guidance for options, stocks, and futures trades. You can also drill down further into alert details. Besides the signal, strategy, and trade guidance you get with the alerts and trading report, the Trade Alert Details offers advanced analysis on the price move and the probability of its occurrence. The price move is described as a price condition with an entry price, a target price, the duration of the price move, and the historical reliability of that condition occurring expressed as probability, as well as the number of times this condition has occurred over the past 5 years. You can also know the probability of any condition occurring within a custom time range and volatility level that is most similar to your current trading environment. This is all done with advanced search, where you can customize the data sample by defining a date range and volatility range for any price condition. Now let's take a look at some advanced features for customizing your default alert preferences and modifying existing alerts and adding new ones. You may use alert preferences to customize your default alert settings. You can set your local time zone, pause all your alerts, add or remove email or text delivery, change your email or text address, change the duration of alerts from one-time event to good until canceled, and even change the sensitivity of the alert threshold so that you don't get the same alert more often than you want. Or you can leave all of your existing default settings in place. Once you're comfortable with your default alert preferences, click Next to go to your trade alert profile. Here you can add new alerts in a more customized manner. Select trade alerts for your trading style, such as scalping, day trading, or swing trading. Or select alerts based on how long you prefer to hold the trade. And you can select only the symbols you prefer to trade. You can select by recommended instruments like only calls and puts or only credit spreads. You can choose the days of the week that you want alerts for. And you can select only alerts that meet your minimum probability level. After you have added new alerts, you can use Manage Alerts to delete existing alerts, including the default alerts you received when you signed up, And you can modify any of the default preferences on any individual alert or create new alerts with custom price triggers. Using the advanced features will give you tremendous flexibility to customize your alerts. But the default trade alerts you receive already may suit you just fine. Now that you are armed with some very powerful information to help you see which price conditions are predictable and which price action is just random, you can leverage this powerful information into profitable trades. Once you know the probability and the direction of a price move, you can apply that to any trading method that suits you, and then use that to your advantage. We also help you to leverage this powerful information at the right time into strategy and action with trade strategy and buy-sell guidance. Now here are 10 tips that you can use with the QuantDirection platform to get the most out of your trade alerts. Tip 1. Trade alert entry levels are the ideal points to enter since they give you the most price movement. If you miss the entry level, it does not change the overall probability of the move, so the value of the trade may still be acceptable, even at a different price level. Tip 2. Don't use stops. It's usually best to stick with the trade from start to finish. The reason is that a price condition will begin and end in the same manner within the historical probability. During the trade period, price may fluctuate in any manner. The only exceptions would be unusual types of events like Fed announcements or earnings, which should be avoided. Tip 3. Expected moves and price zone charts can help guide entry and exit levels. Price zones tend to act as points of gravity, pulling and resisting price from these levels. Viewing real-time price in the context of the price zones then can be insightful for entry and exit points, especially if you are looking for an exit point before the condition reaches its target level. Tip 4. We provide price condition descriptions so you can understand the nature of the price action that we are measuring. These used with price zone charts can help you to optimize entry points, especially if you have missed the entry level we have recommended. Tip 5. A good practice is to allow some buffer or margin on price zone levels. So for example, if the price target is zone 4 and the price level for that zone that week is $100, it's a good practice to close the trade about 0.1% before that target level is reached. Or if the target price level we give you is slightly beyond a price zone level, you can optionally hedge some risk by closing at the price zone, where you may see some resistance, instead of the target price. Tip 6. All good trading practices should still apply, including avoiding emotional trading, small position sizing with diversification of trades, and staying informed on news and special events that impact normal market behavior. Using paper trading while getting started is advised. Tip 7. Avoid doubling down on either a winning or losing trade because the probability values are the same at any time during the trade. Your odds don't improve. Tip 8. If you are going to close a trade before the exit level, then ensure that your return is greater than the probability of failure. For example, if the price condition alert has an 80% chance of success, meaning a 20% chance of failure, your P&L should be above at least 30% before closing. Tip 9. Our probabilities are based on price moving to a specific level by a specific time. If that occurs, say, 80% of the time, we know that in the 20% of the time it didn't achieve that threshold, that sometimes it fell a bit short or took a bit longer. As such, you can improve your odds by pulling back your target level, but keeping the direction the same, and with options, extending your hold by a day. Still maintain the minimum return threshold we described in Tip 8. Tip 10. Don't just look for the highest probability price conditions. Sometimes bigger price moves over shorter periods of time can produce greater returns even with lower probability. And here's a bonus tip. For experienced users, you can use advanced search to narrow your data sample from 5 years to any period of time you like. You can also exclude data from periods with very high or very low volatility. Typically, however, when probabilities are above 85% over 5 years, you won't see much variation year over year. Need some extra support? No worries. Let me turn it over to Jack, who will tell you about some of the support options.
Thank you, Brian. There are plenty of resources accessible directly from your personal dashboard that you can utilize to learn more about the robust features of the platform. The knowledge base has articles, frequently asked questions, videos on advanced platform features, including more in-depth videos about the alert system. There is also a glossary of definitions and terms used on the platform. For one-to-one support, you can find a link in your welcome email to schedule a 30-minute session. For how-to questions, open a support ticket or send an email to support@quantdirection.com. For real-time support, use the online chat from your dashboard or our website. You may also enjoy reading the QuantDirection blog or viewing expected moves and price zone levels on real-time price charts. All these resources available right from your dashboard. Take a tour of your dashboard and the platform by clicking on the Get Started tab on the right side of the dashboard. Back to you, Brian.
Thanks, Jack. I hope you now have a better understanding of how to use trade alerts. The default set of alerts you'll receive with your account, set up as an excellent group of high-probability, easy-to-trade conditions for stocks, options, and futures. You can use these right out of the box to improve your trading results. And please remember, we're here to help. Please reach out to us anytime by emailing support@quantdirection.com or via live chat. We'd love to hear from you.